The goal of every forex trader is to consistently generate profits from their trades, whether the person is a scalper, a swing trader, or even a day trader. Their ultimate goal is to use their profit to build wealth and achieve financial independence. What I'm going to do in this particular lesson is I'm going to show you how you can generate profit from the financial markets consistently by trading with smart money concepts. Smart money concept is the strategy I've been using for years, and I've been explaining this strategy on this particular platform. Now, if you can pay attention today, you're going to understand how you can generate profit consistently from this market by applying this strategy correctly. Because where people make a lot of mistake is the application of this strategy. Some of them understand this strategy, but the application has been a very big problem in the markets. And secondly, I recently shared the trading results where I entered the trade using a particular strategy. It's actually a smart money strategy, but some people said they are not familiar with this setup. Now I'm actually going to explain that particular setup in this lesson. Okay, so this is what we're going to cover for today. Let's jump straight into it. Now, trading with smart money concepts, you need to make set of rules, because set of rules is actually what is going to give you the results you're looking for in the markets. You're looking to be consistent in the financial markets. This means you have to apply set of rules to find consistency in this market. Now, looking at EURAUD, what you're going to understand is that price has been in an uptrend. If I try to zoom out, you see price has been trending up. After we had a shift in structure from this area, you see price has been trending up to the moon, and what you basically have to do is to simply trade in line with the trend. But does that mean I can't take counter trades? If I have opportunity to trade against the trend, I can actually do that, but I also have to keep in mind that I have to be strict with my stop loss, and I have to be strict with how I manage my trades. Now, if you look right here, I'm going to show you a few price action of how I got to trade. I shared the results this week on our platform. So looking from this particular area, this is where I had the first trading opportunity. So what I saw right here is that after we had this range right here, price expanded to the upside, and this is actually a very good break of structure right here. This is a very good break of structure which confirms that price is continuing to the upside. And a lot of times when you see me explain, I talk about institutional candle. Now this is where I'm going to mark as my demand level, because this is a range created demand level. Now, while price was returning, we see price leaving an inducement area. Now, this inducement area serves as a liquidity area, because a lot of people might have interest to trade from this particular area. Now, if I decide to mark my demand level, if I mark the zone correctly, you're going to see that we had a little mitigation and a continuation to the upside. I had this trade on my watch list, but I couldn't get involved because of my zone refinement. Just like I said, zone refinement is a practice I've been applying in my trading, but I wasn't able to get involved. Now, let's look at this price action and analyze it correctly for you to understand this particular trade. Now, what do we need if you want to build a trading plan around this trading opportunity? You can see we have an institutional candle. I've always explained what makes up an institutional candle. An institutional candle explains institutional footprints. If you check the lesson before this particular one, I actually explained about institutional blueprints. Now, what you can clearly see is that price came back. We have this inducement area, and we have another continuation to the upside. Now we have all our confluence, a very good demand level. We have the inducement area, that's the liquidity area, and we can see we have some pricing efficiencies. Now we see price returning back to mitigate this level, and we have that rapid expansion to the upside. So it was kind of painful that I missed getting involved in this particular trade, but overall it was a very good trading opportunity. Now, after we had this trade opportunity, we had another one that presented itself right here, and from what you can see, when price reacted rapidly to the upside, we have this break of structure right here. So when we have a break of structure, you see we've identified another institutional candle where we see institutions pushing to the upside. Now this is where you're going to decide to mark another zone, and this is where a lot of people actually get it wrong when it comes to selection of their zones. You see, we have institutional candle. If I try to tell a lot of people that this is actually an inducement area, more like a smart money trap, a lot of people might not really agree with me, but this is an institutional trap right here. While selecting my zone, this was actually the zone I selected when I was looking to trade from this particular level. You see, this is my demand level right here. Price is bullish and I'm looking to trade in continuation with the institution. So this was the demand level I marked, waiting for price to retest this particular level. And you see, this is a very good trading opportunity. Institutional candle, we have a demand level and we have this inducement area. And looking at the inducement area, you see price already swept the liquidity at that low. And if you are looking to trade from this particular area, you must have lost money on this particular setup. Okay, if you're looking to trade here, you see price spiked underneath the low and we're having that reaction to the upside. While we were actually waiting for price to retest this particular level, you can clearly see that we have another good price action. If I try to draw your attention to this particular area, you can see that we have a liquidity sweep pattern, and you guys have seen me explain liquidity sweep pattern, which is one of my favorite trading pattern. You see, we have that liquidity sweep. Not only do we have a liquidity sweep, price tags into this range created demand level right here, because this is more like a range created demand level right here, which price came back to mitigate. After the mitigation, we had the rapid expansion to the downside. Now that price expands rapidly to the downside, you can still agree with me that we have a very good break of structure to the downside. Price breaks this structure right here, and this explains that we have another good trading opportunity right here. So when I saw this particular one, and you know, these setups we actually shared to my VIP community, this particular one we had at this low. So when I had meeting with my VIP students, I think we were reviewing what we were seeing in the market. So I told them that I'm actually going to pay attention to this particular area. You see, we have a very good supply level right here. So I said to them, man, I'm going to pay attention to this particular supply level. I'm going to look to trade from this particular supply level because it meets the criteria I'm looking to trade within the market. I have my liquidity sweep pattern, which is my favorite trading pattern, and you see price reacted to the downside with an institutional candle. Not only did price did that, you see we have an inducement area right here. So if there is space, I'm actually going to play the record of where we had that analysis. If there is space, I'm going to include that, so you're going to see it. Now if price continues to maybe retrace to the upside without mitigating this level, this is where I might pick interest to trade from. Okay, this is a very good area I might decide to trade from, and I might actually share this setup by next week. I might share it. Now this is a very good area I might decide to trade from here, and you can clearly see that we have an inducement area. So this is another area I might consider to trade from, expecting a retest and a continuation to the downside. But if price probably mitigates this level and react to the upside, then I might look to disregard this particular setup. So all the confluence we are met, and it was a very good trade opportunity. Now all I did was just to place my pending order and wait for the retest of this particular level. Let's play price forward and see how this plays out. Now you see price didn't actually mitigate the demand level. Now we've seen that reaction to the upside, and during that review I said to them that if price mitigates this level, I'm not going to look to trade from this particular supply level. But if price starts reacting to the upside without the mitigation of this at demand level, then it's a very good trading opportunity and I'm going to pay attention to it. And you see how price comes back, mitigate it immediately, and we have that rapid reaction to the downside. And you see price is still trending to the downside currently. You see how price is retracing to the downside, and I have my take profit at this particular area. Okay, price is here to hit my take profit, but price is actually running about 3%, and I'm able to secure about 2%. Okay, I've been able to secure about 2%, so even if price reversed, I will make 2% from this setup. But price is currently running about 3%. So let's play price forward and see. You see price came very close to my take profit, but is yet to hit my take profit. So this is the current price action right here. This is Euro AUD, the 2 hours time frame. So this is a very good trade opportunity, and this can actually be a case study for you. Go back to your price chart and study this price action. Now have it in mind that my demand level is still very much valid. If price comes back to this demand level, I'm still going to look for the confluence I need to enter and long the market, because the overall structure is still bullish. We don't have any shift in structure currently. The only way we can have a shift in structure and we have a shift in our bias is if price takes this particular low. When price takes this particular low, this is when I can maybe look to start paying attention to a bearish market. But for now, price is still bullish. Yes, I was able to get involved in this particular area to take some shots, but price is still bullish. So if price comes back to this level, is still a very good level. So if you're looking to trade this, pay very good attention to the confluence you need to take trades. This is my own personal trade, and I'm not asking you to take it. Okay, So let's see the second example, but before that, let me announce our mentorship that is coming up next month. It's a quick announcement. Our mentorship will be coming up next month, which is September. This is an advanced smart money mentorship. So in this mentorship, you're going to have access to our advanced smart money course. You're going to be part of our weekly chat breakdown. You're going to be part of our VIP support group. Our trading opportunities will be shared as a premium possible trading opportunities. You're going to be part of our weekly Zoom meeting. Okay, so this mentorship costs $216, and if you want to enroll for this mentorship, you have to visit our website at www.borntotrade.com. You can clearly see that the trade has double E. So this mentorship can actually help you find your way to financial freedom, find your way to consistency in the financial markets. And you can actually go ahead to see more, to see the reviews from those who has been part of our other mentorships, and even those who were part of our mentorship from January. You're going to see some of their reviews there. So I would advise, if you have interest in enrolling for a mentorship, you can come over here and enroll for this mentorship. And I tell you, this is the best time to enroll for a mentorship, because after now it's going to change from this price to the original price. So I advise you enroll for a mentorship right now. Let's see the second example of today's lesson. So this is the second example of today's lesson. Now, this particular one, I shared the results and some said they were not familiar with this particular setup, forgetting that I've made few lessons talking about the turtle soup strategy. So everything you need to know about this particular trading setup I won was from the turtle soup strategy. Now, when we talk about the turtle soup strategy, I'm actually going to link a video on turtle soup in the description. So if you're confused about that, you can watch and have more knowledge about the turtle soup. Now, the turtle soup strategy is simply capitalizing on fake breakouts. That is, when price fake breakouts, you're going to capitalize on that and take trades on that. Now, if you want to win using the turtle soup strategy, you're going to pay attention to old highs and old lows. When price take the liquidity above old highs or taking the liquidity underneath old lows, this is where you're going to see that that sweep of liquidity is actually a false breakout. Then how you're going to get involved is when we are able to identify a change in state of delivery, where price change in its state of delivery in the market. You're going to capitalize on that and take trades. Now, if you're looking at this particular chart, this is CHFJPY price charts, and this is actually on the 2 hours time frame. If you're looking at this chart, you're going to see that price has been building liquidity. I've had my eye on this particular pair. I have a very good trading opportunity here, which I couldn't ignore. If you look at this particular area, you can see that we have equal lows, and equal lows is sign of liquidity. And most of the times, a lot of people actually see me marking it as a range when I decide to mark it as a range. And a lot of you understand it better when I mark it as a range. So this is a range right here. So in this particular range, price has been building liquidity. A lot of liquidity rests underneath these lows. And if you actually trade the power of 3 concepts, where we have the accumulation, manipulation, and distribution pattern, if you combine it with the turtle soup, you're going to make money from this particular setup. Now we had the accumulation phase right here. Price building a lot of liquidity, and liquidity in the financial market means money. A lot of money is resting at this particular low, because support and resistance traders, a lot of them are trading from this support level to the upside. They made money. So a lot of people, when price retested this level, they're going to enter another buy in the market and they're going to trade to the upside. This simply means that their stop loss is resting beneath this low, and a lot of money is resting underneath this low. So any support and resistance trader is going to still expect the exact same price action, where price is going to retest this particular level once more. They're going to enter their long position. I'm not saying that support and resistance strategy does not work. I'm just building my own trading idea from overall thing that is happening in the markets. Now, since smart money knows that a lot of money is resting underneath this low, all they're going to do is looking to sweep the liquidity underneath this low. Now, if I try to play price for to see what happens, what you can clearly see right now is that price comes back to sweep that liquidity. You see the liquidity that has been resting underneath this low, price came back, sweeps this liquidity, and we have that massive retracement back into this range. Now I want to bring to your understanding that if price sweeps this liquidity and continues to the downside, then we don't have a trade setup, but we have other confluence that made this a very valid trading opportunity for me. Now when we had this liquidity sweep, you can see how this bearish candle swept the liquidity and price retraced back inside this range with 2 bullish candles. So we have that bullish candle pushing to the upside. Now this is a turtle soup pattern, and I actually explained how you can get your entry in those lessons. Now you can clearly see that this is where we have the change in state of delivery, because this particular bearish candle is the candle that swept the liquidity and the retracement back into the range. You can clearly see that the bearish candle could not even close outside this range. It closed back inside this particular range, which means that the money underneath these lows has been swept, and those who are actually looking to go short from this particular level, that is the breakout traders, when price moved underneath the low, they'll be looking to go short. Now you see price goes back inside the range, which means that you're going to have higher price. That price is going to reverse from that particular area. Now what I did is that I marked this particular area as my change in state of delivery, because you see we have bullish candles closing above this particular high, so it makes it an order block. And you see, if price comes back to retest this order block, we have an entry. So this was where I got my entry. Now how you're going to get involved is placing your limit order right here. Once price comes back, it's going to tag you into a trade, and your stop loss placement totally depends on you. You can decide to place your stop loss right here, but I decided to place my stop loss at the opening price of this bullish candle. So this is my stop loss right here. Now we're going to expect a retest of this level and a continuation to the upside. Now you see price moved to the upside for some time. Now this is where we got to the retest, and I'm going to expect a continuation to the upside. This is where I have my target. I hope that price is going to hit my target, but for now my target has not been hit for now. Now you see price come back, retest it once more, and we have that rapid move to the upside. Like I said, price is here to hit my target, but I still have an open position on this particular setup. So this is it about how to trade the turtle soup. If you have interest in learning how to trade the turtle soup, I have strategy. I'm actually going to link them in description, and you're going to have more knowledge about the turtle soup. So this is where price is currently. Now what I have to tell you is that you can find financial consistency is if you can build on any of these smart money strategies, build on one of them and make rules. When you make rules on one of these strategies, you're going to find consistency in the financial markets. And if you want deeper knowledge about smart money trading and how you can make money from smart money trading, this is where enrolling for a mentorship comes in. Okay, you can decide to enroll for a mentorship. You're going to make good money from the financial market. And if you actually want to make inquiry about a mentorship, I'm going to link a direct contact in the description also. I hope you got value from this. If you actually want to build on any of this strategy, you have to do your back test. Just like I always say, if you want to build on a strategy, you have to back test and confirm that it actually works in the financial markets. Then you can build on that and make money from it. But have it in mind that every single thing you see me teach on this platform is what I trade. Okay, that's my trades, and most of this is actually trades I take. Any week you see me take good trades, I actually make lessons on that, so you can learn from it and improve on yourself and your trading. Okay, so thanks very much for watching this one. See you in the next lesson.